Hi, it's Brian Jessen speaking with Guaranteed Rate. I wanted to give you a couple things to give you a sense of what's going on in the economy as well. So I wanted to give you some stats, not get too technical, but like for instance, new home sales for July, they were hoping that they'd be about 575,000. They had been 585,000. The previous month, they came in at 511,000, disappointing. Sales that are pending, sales under contract, they had gone down 8.9% in June, kind of scary. They were expected to go down 4% in July. They only went down 1%. So not bad news, less negative than they thought. Items like refrigerators, cars, TVs that are supposed to last a long time, they're called durable goods. June, they had gone up 2%. They expected them to go up 0.6%. They were flat. They hadn't gone up at all in July. So disappointing. Our gross domestic product that's produced in the United States, it's tracked very closely by the Federal Reserve, who sets our short-term rates. The previous estimate for the second quarter was negative 0.9. It ended up being only negative 0.6. They revised it. Still down, still not great, but better than expected. So some of the other things to really kind of pay attention would be personal consumption expenditures. That's like a big deal to the Fed. They really watch this. They watch the overall number and they watch excluding food and energy, our famous talk we talk about. That's kind of crazy to exclude. But the overall number was down 0.1% in July, was less negative than expected. But the core one without food and energy was up 0.1% and less than expected. They thought it'd be up higher, but that's because gas prices have come down. And then consumer sentiment, which you'd think would be down with some of these numbers, it had been 51.5% in July. The August number came out and it was 58.2, and it was much higher than expected. So you got this mostly cramming, not great news, some good news. Employment's fairly strong still, but changing. So that's what's causing the Fed Reserve some issues. They had their chat on Friday that I talked about earlier. It was kind of negative or hawkish that they're going to continue to raise rates, and they don't see that turning around to lowering their short-term rates anytime soon. That market didn't like it. It declined a lot. So I know this is a little bit of a longer minute for the end of the week. I just wanted to give you a sense where there's this tug and pull of some positive news, some negative news, and the Fed's trying to figure out how much to raise their short-term rates in order to figure that out. So questions, give me a call, Brian Jessen at Guaranteed Rate, or email me, brian@rate.com. Let's have a conversation.